All right, everybody, welcome to our Defender Capital Management March update. As always, I'm here with Tayden Van Beek, our portfolio manager, and Brandon Hanson, our economist. So we're just going to take you through the month of March and what happened with the club and where we're at in terms of our portfolio and some of the club actions that we took over the past 30 days. So we'll start with Tayden.
All right. So the good news is our portfolio is sitting right over $1 million, which is always nice to see. It's a lot nicer to see six figures, or it's a lot nicer to see seven figures than six figures. We were up a little bit during the month of March, but we did slightly lose to the S&P 500. If we go to the next slide, we can see how some of our stocks moved. Obviously, our two big banking stocks really took a hit with Silicon Valley Bank folding. Just a lot of lack of confidence in some of the bank stocks, but we still feel that we have some of the big bank stocks. They could be too big to fail. So we still feel that they're in a really big position. And with people moving money from smaller regional banks, they're moving it to banks like US Bank and Wells Fargo. So we think that in the long term, US Bank and Wells Fargo will recover from this and they will get over this. Intel, usually you're seeing them in the red, but this week they decided to turn it around, up 30%, which is really good news, although we are still down 46% all time on them. Hopefully 2023 could be the year that they finally turn things around and start putting some of their new technology that they've been putting a bunch of money into their chips, which should hopefully start giving them the edge on their competition. And Microsoft, they've just been killing it with AI, the main AI stock, and investors are kind of realizing the potential of AI. So they're just pouring into Microsoft right now.
Yeah, so as far as the Fed news, the Federal Reserve, as of March 22, their meeting minutes, they bumped the Fed fund rate target range from the 4.5 to 4.75 up to 4.75 to 5% range. So 25 basis points, which is pretty expected based on inflation and the way inflation has been decreasing lately. They're happy with those 25 basis point bumps. So we're going to continue to see that, as you can see on the right here, with just our graph or the table we have. The median is expected to keep dropping for the Fed funds rate, but if you do note that the ranges for 2023, 2024, and 2025 all include around the 5.5 target range, and that is the Federal Reserve's basically doing that to make sure this inflation keeps going down, and they're going to keep that target range available, if you will, until that inflation hits the 2-3% we're looking for. Good news is as far as these bumps go, it is working. March inflation will come out hopefully in the next couple of weeks, and it is trending to be below 6%, which will be the first time since September 2021. So if we go to the next slide, recent news, which came out just at the end of March, that is very interesting as far as our investing club, is the Chinese claiming they are trying to take over the dollar and with their currency of the yen. This hasn't really been a big deal lately because a lot of smaller countries like Hong Kong and Singapore have had higher trade volume in the yen than the US dollar, which smaller companies that don't contribute as much to GDP or US interests don't really raise an alarm. But Russia, for the first time in March, announced that they had more volume in the yen than the dollar for the first time ever. So just something to look out for as an investment club and potential adjustment or looking into foreign investments if this is going to happen. So we just need to keep that in mind. Once again, the dollar is prominent throughout the world, and 87% of the trading market is done on or based on the dollar. So this would be a very long process as the yen takes up 3%. So not too worried, but just something to look for as countries start to stack their reserves full of yen instead of dollars, and just something to keep an eye on as we move forward into 2023.
Yeah, so in terms of the club, for the month of March, the way the dates fell, we only actually had one meeting in March due to spring break and our 360 class meeting on twice. So we had one meeting, and during that meeting, we discussed Rio Tinto, which is one of our holdings. We own about $35,000 or so worth of Rio Tinto. It's a large mining company based in Australia and London. They're multinational. They have operations all over the place. But during spring break, the SEC introduced a charge against, or resolved a charge against, a long-standing case against them of overseas bribery in the country of Guinea in Africa. So as a club, we kind of took a break from our usual meeting structure, and we tried something new, going through a case study of the ethics surrounding the Rio Tinto and their actions in Africa. So in the end, we decided to hold on to Rio Tinto. We determined that they had implemented enough systems, and they had fired the executive responsible. They themselves initiated the investigation and brought it to the SEC. And many of the other facts surrounding the case, we decided that they had successfully atoned for their breach here. So we're going to continue to hold them going forward. So it was a bit of a different meeting, but I think it really went well. And I'll make sure you have a look at the attached case study that we went through in regards to this. So that's our club update for the month of March. Thank you for watching, and we'll catch you in April. So.